Hi everyone, welcome to another Weekly Forex Forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, the Pound USD, the Dollar Yen, as well as the Euro versus the Canadian Dollar, and we're going to wrap things up with XAUUSD or gold. I do think some of those markets are setting up for big moves after weeks of consolidation, so let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. Also be sure to check out the join button right next to that, where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. So first up, as always, we have the Euro USD, and we have a familiar pattern that we've been watching now for several weeks. This ascending channel is the one that I'm waiting for in order to make a trade here. So I'm waiting for the Euro to either break to the upside of this descending channel top or to the downside of this ascending channel bottom. So remember that this channel top up here dates back to last year. So we've been looking at this descending channel now ever since early October. So this descending channel is the intermediate trend. However, the short-term trend recently has been pointed higher based on these higher lows and higher highs. You can also see how recently the Euro struggled right at that resistance level around 111.70/80. So this is the level that the pair topped out at earlier this year, and you can see this long upper wick back here that formed right in that same area. So since then we've seen a rotation lower back into 110.70 support. So on the daily time frame, this level has been incredibly significant for the Euro throughout 2019. So this week, given where Friday closed, I would expect to see some buyers come out try to defend this area, which means we could see a short-term pop higher. However, the way the Euro pulled back recently does indicate to me weakness. So if we had seen the pair come up and retest this area, pull back slightly, and then come back and retest it again, that would be an indication that we're going to see a retest of this channel top up here and perhaps even a break above it. However, given this aggressive sell-off we saw, this does indicate to me that we could see a push back down here to this channel support. And if we get a daily close below that level, that could open up short opportunities for a move down to these two lows around 109.90. And that 109.90 level is going to be incredibly significant because it's where the Euro broke out in October. So remember that we had this descending channel back here where the pair broke out in October and retested that 109.90 area. So this candle right here retested 109.90 before it took off in October. So the breakout candle was here. This was the retest. And then you can see two more retests here earlier in the year. So if we do see a close below this channel support, that could open up shorts for a move down to 109.90. Now, of course, a daily close below that could take the pair all the way down here to the 2019 lows just below 109. But as of right now, I don't want to trade this because we are still stuck in this consolidation. So until we see a breakout either of this channel support or a move higher and a break of this channel top, I do think the Euro is going to continue to be a challenging pair to trade. And keep in mind too that we're coming up on the last 2 weeks of December, which means we're faced with the Christmas holiday as well as New Year's. So do expect lower than usual volume. Next up, we have the British pound versus the US dollar or GBPUSD. And I mentioned this one last week as it was coming off that 133.40 resistance level. So I talked about it as it was coming off this area and retesting 131.70. So I told members that based on the aggressiveness of this pullback, I did expect to move at least into 129.80 to retest this previous range top. So I discussed the pound back here on this candle as it was breaking out from this range, and I said a move higher was likely up into 131.70 or perhaps 133.40. So 133.40 was really our longer term target for the pair. And it took a lot less time than I thought it might to reach that area. But notice how 133.40 is a key horizontal level based on the recent range here. So if we go back several months, you can see 133.40 has been incredibly significant. Furthermore, this ascending channel that's formed by this 2019 short-term uptrend also intersects with that 133.40 horizontal level. So notice how during this rally, the pair moved above 133.40 intraday. However, it never did close above it. So this close right here was below it. And the very next day, we had this long upper wick and again, a daily close below 133.40. So as of right now, the pair is finding some support at 129.80. And I would expect buyers to try to defend this area this week. However, if we see a close below that, that could take us back down to this confluence of support right here around 127.70. So based on this low right here and also these highs from earlier this year. Notice too how 127.70 intersects with this ascending channel support. Just keep in mind that if we do see buyers defend that 129.80 support level, we could see the pound rotate higher once again, perhaps all the way back to 131.70 before we get that next leg lower. But I would keep a close eye on this 127.70 because just like the Euro USD, I do think the bigger opportunity here could come on a close below this channel support. So if we see the pound continue to weaken and move lower down here into this confluence of support and break below it, that could open up levels such as 125.70 and perhaps even 123.80. So based on the aggressiveness of this recent pullback, I do think that the pound is going to weaken further. However, this week it's all going to depend on what happens right around that 129.80. So it's intact as support until we get a daily close below it, which would open up that confluence of support around 127.70. So the dollar yen or USDJPY hasn't done much lately. However, I do want to keep a close eye on it because of these swings in the market recently. So a lot of times all you need are swings like this in order to tell if a pair is strengthening or weakening. So you can see how recently we've had a lot of these higher lows. So going back here, notice how these lows start to get more compact. So back here, we have these broader swings in the market, and recently the pair is starting to get squeezed, but we still have those higher lows, and we also have these higher highs. Now, one thing's happened recently where the dollar yen has come into this trendline resistance that dates back to these highs. So I mentioned this last week, where these highs up here combined with this one do create this resistance area that we're seeing buyers struggle with at the moment. So if we do see the dollar yen start to come off of that level and push lower and start to carve lower lows and lower highs. So right now we have these higher highs. However, look at last week, how it did struggle at this recent high. So as of right now, the pair is struggling to carve higher highs based on these higher lows. So if we see the dollar yen start to rotate lower, retest that 108.40 level and start to close below it and start to carve lower lows and lower highs, that would be an indication of a rotation lower off of this trendline resistance. Alternatively, if we see the dollar yen close the day above this resistance level and then retest it as support, that could be an indication of the next leg higher. But I do think based on this movement right here, this to me does signal that we could see a rotation lower from the dollar yen. But all in all, it's going to depend on what happens up here at this resistance area. I also think that as of right now, there's nothing to do here as long as we see this sideways consolidation persist. I don't want to get chopped up in this. I would rather wait for a breakout either below this 108.40 area or above this trendline resistance. The euro versus the Canadian dollar is a newcomer to the list. However, I did mention it last week on the blog. So essentially we have this intermediate trend that's defined by this descending channel. And then we also have this short-term ascending channel that I was looking for a break below this support level last week. So on the blog, if you remember, I mentioned the pair when it was actually breaking below this channel support. So I mentioned it when I started writing that post. The pair was trading right above that level. However, by the time I got done, it had already broken below it, and then we got that daily close at 5 p.m. Eastern below this channel support. So this pattern right here, to me, represents consolidation within this broader downtrend. So I was looking for short opportunities, and you can see how Thursday and Friday came pretty close to retesting that area as new resistance. So from here, I would not be surprised to see the EURCAD move lower into those year-to-date lows around 144.30. So this area somewhere down here. But do keep in mind too that we have a short-term trend line that could become a factor this week. So if I draw a level from these two lows, this 145.30 area down here could attract buyers. So don't be surprised if we see a move into this level followed by a slight bounce higher. So whether or not this bounce right here takes us all the way back to this area, or we just see a short-term pop higher and then a close below it, that's anyone's guess. But I would expect to see some buyers come out and try to defend this short-term trend line. But as of right now, given this intermediate downtrend followed by this short-term uptrend and this close below channel support last week, I would expect the EURCAD to continue lower, but it is going to take a daily close below this trend line support in order to expose those year-to-date lows around 144.30. Last but not least, we have gold, or XAUUSD. And this, in my opinion, is perhaps the most interesting pair of the five. And that's because of this falling wedge that I've discussed now for several weeks. And this wedge pattern comes after this massive rally we saw earlier this year. So to me, we had this uptrend, and we've since had consolidation moving in the form of a falling wedge. So this very well could be a continuation pattern. However, we need to see gold close above that confluence of resistance around 1480. So notice how we have this horizontal level here based on these lows and then these highs. And 1480 is also the intersection of that falling wedge top. But just keep in mind that even if we see gold close above 1480, so a close up here, that does not mean that we're guaranteed to see gold move higher right away. And I want to take you back to another falling wedge that formed earlier this year where we did see that breakout followed by a close back below the level. So this candle right here broke this wedge top. However, we then saw the market close back below it. And what happened here, in my opinion, is a lot of retail traders started to get long around this area. They then put their stops really tight right around here, and market makers saw that and they ran those stops, retested this support level, and then eventually followed through with that breakout. And this can happen in any market, not just gold. So what do you do about this? Well, there are two methods you can use. And the first is that instead of entering with a full size position right away, why not enter with blocks? So cut your position size either in half or into fourths. So let's say your full size position is 2% of your account balance, and gold closes above this area, retests it as new support. Instead of entering right here with 2%, why not enter with a 0.5%? That way, if you do see the market close back below this area and start to run those stops, just like we saw back here earlier this year, you're not left with a 1 to 2% loss. Instead, you're only looking at 0.5% loss. Of course, another option is to wait for some type of price action confirmation. So if we see gold close above this area, rotate lower and retest it, why not wait for a pin bar or even engulfing candlestick to form in order to confirm that breakout for that next leg higher? You can also, of course, combine those two methods, so splitting your position up into blocks and also waiting for price action confirmation. So those are two ways to help sidestep false breaks like that. But all in all, I do think that based on this uptrend and this recent consolidation, so this uptrend back here, this consolidation, this does point to strength in my opinion if we see a close above that confluence of resistance around 1480. Now, if we see a break there, the next key level I would keep an eye on is right around 1515. Alternatively, we could always see a rotation lower, in which case we could see gold move back to 1450, this horizontal support right back here. But as long as XAUUSD is within this falling wedge pattern, so as long as it's above this lower level right down here, I do have to stay relatively bullish gold and look for a close above resistance, followed by a retest of that area as new support for a push up into 1515 and perhaps even these year-to-date highs around 1550. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.